Most retirees don't panic because of bad news. They panic because of silence. When a Social Security deposit doesn't hit on time, when a Medicare premium suddenly jumps, when taxes quietly eat into a fixed income, that's when fear kicks in. And that's exactly why this update matters more than it sounds. Right now, millions of Americans over 65 are filing taxes without realizing that a new federal rule can legally protect thousands of dollars of their income. This isn't a rumor, it isn't a loophole, and it isn't something you have to apply for. It's a built-in deduction that many seniors will miss simply because no one clearly explained it. For the first time in years, the tax system is doing something quietly helpful for retirees. A new $6,000 senior tax deduction is now available to Americans age 65 and older, and it directly reduces taxable income, including income tied to Social Security benefits. Here's why that matters. Most retirees assume Social Security is tax-free, but that's rarely true. Depending on total income, up to 85% of Social Security benefits can be taxed. That means money you already earned, already paid into, and already rely on gets taxed again, right when you need it most. This new deduction changes that math. If you are 65 or older, the IRS now allows you to subtract up to $6,000 from your taxable income automatically. If you're married and both spouses qualify, that protection doubles to $12,000. This deduction sits on top of the regular standard deduction. It doesn't replace it. For a single senior, that means shielding as much as $23,750 from federal taxes before credits even come into play. For married retirees, it can protect nearly $47,500. For many households, that's enough to wipe out taxes on Social Security entirely. And here's the part that matters emotionally. This does not affect your Social Security check. It does not reduce benefits. It does not trigger a review. It does not increase Medicare premiums. Nothing changes except how much of your income the IRS is allowed to touch. Many seniors worry that claiming deductions will flag their account or interfere with benefits. That fear is understandable, but in this case, it's unnecessary. The deduction is built directly into Form 1, 040, and 1040SR. You simply confirm your age. The system does the rest. The deduction applies from 2025 through 2028, meaning this isn't a one-time break. It's a multi-year protection window, especially valuable at a time when medical costs, groceries, insurance, and utilities continue to rise faster than benefits. There are income limits, but they're higher than most retirees expect. Single filers qualify fully up to $75,000 in modified adjusted gross income. Married couples filing jointly qualify up to $150,000. Above that, the deduction slowly phases out. It doesn't disappear overnight. For the average retiree living primarily on Social Security, pensions, or modest retirement savings, this deduction is fully accessible. And that's the problem. Millions of eligible seniors won't claim it simply because no one told them clearly. This is not flashy news. It doesn't come with a press conference, but it quietly determines whether your Social Security income stretches through the year or runs short. Retirees don't need more noise. They need certainty. And this deduction delivers something rare in today's system: legal, automatic, stress-free relief. If you're over 65, this tax season isn't just about filing, it's about protecting the income you already earned. And once you understand that, you stop worrying about what the IRS might take and start focusing on what finally stays yours.